Despite the downside that we face today, macro signals are suggesting a continuation to the upside. A very simple answer to today's rejection can be found using a common moving average on a larger time frame. The resistances we're facing are normal and typically happen when price is finding potentials to break. Welcome back to the channel on this happy 4th. This is ARCa, and let's grab some popcorn. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor and hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. Let's go ahead and take a look at AMC here on the 30-minute chart and just display to you the chop box that we're currently in right now and the targets that were already presented to you days and days ahead of time to identify the range of trading, right? So this is presently the opportunity that we got for a potential long, and this is the opportunity that people got for a potential put down into the targets, perfectly executed within our ranges, right? Of course, we still have upper bounds and lower bounds, but that's going to be relevant when we face them, right? So let's go ahead and now move on to the next chart here, team, because I have some things to explain to you as the reasons why we would face the resistances that we face today. Okay, check this out. This is your monthly time frame here, and what you're observing here is actually your 10-day simple moving average within the monthly time. Remember, we just got this monthly close. This is the new month right here, and we are observing the presence of a rejection at the SMA 10. First of all, we already identified that we could have made a move down to the 50% retrace of this bar here. Right, so that would have put us roughly at around that the area of around 483. We already got that. Now we're retracing towards the upside, and of course we're going to get some take profits from longs right at that SMA 10 monthly, right? All good. We just pierced right above it, and price action rejected from that. Now, let me just go ahead and display to you a little more so you can identify more potential rejections, right? Take a look at this next chart right over here. Okay, so we're looking at the volatility bands in this case. Some people know them as Bollinger Bands, right? So this is my personal script, an algorithm that I've developed. So what it does is actually gives me the mean valuation by number, the upper bound of the first standard deviation multiplier, and the second standard deviation multiplier. And it actually gives me the upside and the downside multipliers as well with a dollar value. It is active. It moves as we go, right? So what you're observing here is that price action has made a bounce from the one standard deviation downside and is now making a rip towards the upside at the mean. So this is another reason why we resisted today. We came right back up to that mean and we're resisting. It is going to be a tough break for us to get above the mean and continue to the upside, but this was already a potential mean reversion play. And now we're at that mean. We got to make that decision now. And it's looking like there is a bull flag on the weekly time frame here. And that measured move will give us a potential target to around $8.28 if it does break out of this mean here. Okay, so there is a definite probability for that. The biweekly candle closed with a massive hammer candle here usually suggests a continuation to the upside, and the way that we can validate this upside is simply by observing the price action of the following bar, which is the one that we're on right now with 8 days and 12 hours still to close, right? As soon as we get that close, hopefully it can be above this prior bar high around 518 and higher. Then that can tell us that, you know what, the probabilities for continuation to the upside are likely. And then we can start observing resistances at 597 before breaking this, and then potentially seeing the top bound targets here of around that 723 into the area of about 828, where the price objective is landing in, right, guys? So the reason I know this is because I am definitely a trading instructor. Please get in touch with me on ArcMastersCourse at Gmail for the 5 to 7 week now, right, mentorship program for the beginners. And this is going to be in charting and in trading. So please go ahead and get in touch with me. Make sure to make a change on your trading career. Let's go ahead and now move on to the next chart and observe another form of resistance. And this time we're using a different statistical indicator. This is mathematics still. This is a Gaussian band. And you're observing here the resistance today at the top band of the 6-hour time frame. I am personally a bigger fan of this in the 8-hour time frame and beyond, but of course we got to use the tools where they are pertinent. And today we definitely got that resistance from the Gaussian band at this top area here. Now, what's curious, the reason why I'm bringing this up, first of all, I want to bring in a fresh approach, right? Because there's a lot of people who are using the same data, but you know your boy here, ARCa, will always bring in something fresh, something new for you to observe and for you to be like, damn, this guy really is different. Of course, guys. Now I want to be able to show you this right here, right? Check this out. So this is us rejecting that red area just like we are right here, right? So now, look at this. We have a test 1, right? This is a complete test 1. There's no candle within this area that closed inside. All the bars are still penetrating. That's a 1 collective test 1. This is test 2, right? Now, we have test 3 right in here, test 4, and usually what happens when we get a break of that test, guys, do you know that? ARCa's golden rule of 3. I know my master students are out there. They're going to be like, oh, no way. It is respecting the 3 resistance rules, true breakout test on number 4 and 5. This guys, remember 1, 2, 3, 4, and bam, 5th breakout test. This thing explodes to the upside. Now, what are we doing here? This right here is not a test. Why? Because we got this candle in between, this candle right here, it closed outside of this, so this is a breakout play. The next tests will be starting all over again. Check this out. Test 1, test 2, test 3. We have closes inside. Test 4, and we rejected. And what is to happen after that potential test 4 rejection, guys? All right, so yes, in this case, sure, we dipped all the way back down, but look at the explosion that happened on that. This is presently a very, very similar situation happening here. Now, something else to give you some thought. This is your shoulder, your head, your shoulder, and the breakout based on an inverse head and shoulders formation. That is happening again. We have a shoulder, shoulder, head, shoulder, and shoulder right in here, suggesting an inverse head and shoulder breakout strategy with 4 to 5 tests of the resistance, just like we're facing before, right? So this is actually, when price action ended up going to that 1340 that we just experienced, right? Just a few weeks ago. And that is likely the same situation kind of happening again. Got to watch out. Take this with a gigantic grain of salt. Make sure to manage your risk, right? Guys, I am telling you this information because I am very clear about being transparent and being very honest of what I see in price. I do not care telling you what the downside is going to be, and I do not care telling you what the upside can potentially be. Okay, you guys, that's just me, and that's my promise to you. The transparency, the discipline, and the consistency is what we look out for in the ARCa Bulls trading team. So do yourself a favor. Make sure to join the ARCa Bulls trading team using these links on the left-hand side so that you can get yourself to trade alongside us every single day in the financial markets. We are definitely going over tickers like AMC. We looked at GME today. We looked at COS, OBTT, right? OPTT. We definitely, guys, we are absolutely long on Tesla as we speak, and we have been ripping that upside since $180. We hit a massive $245 today, right? So make sure join the team to get your hands on these awesome opportunities. Okay, now let's go ahead and take a look at the other charts here, team. We already kind of knew that Wednesday, because of our study of price action over the entire trading history, right? Actually, you know what? It was about a 5-year history back test, and we're noticing here that we have about a minus spot 88% of decline on Wednesdays, right? And we notice here that it's also the most bearish day that AMC faces. So today was technically always supposed to be red, at least if we follow behavior. Now, yes, yesterday was massively green. We did have a 0.67% decline, but I will say it's not the largest declining day. Today was, and there was definitely a decline today. Now, coming up to week number 2, which is going to be following Friday, right? It's going to be into next Monday. We're noticing here that week number 2, historically speaking, on July, I'm talking about the second week of July, it is a bullish week, landing with an average return of 0.82%. But check out what happens in the third week of July. The third week of July is usually a 14.04% on average return week, which means that there is an exponential jump for some odd reason. And we're already observing the potentials of breakout using formations that we used before a massive upside like this. Remember, take that with a grain of salt. Next thing to see is, yes, we're testing the resistance, bull flag, potential breakout. We have a bi-weekly hammer candle at the bottom of a trend. Guys, there is an infinite amount of signs over here. We're testing the upside on this SMA 10. As soon as we start breaking that SMA 10, there's continuation, guys. I mean, what more can I say, right? I mean, this is an absolute. And then here we have the back test of the AMC weekly time frame bullish engulfing iteration, which are giving us these results right here. 38 out of 38 iterations guessed the upside correctly throughout the entire trading history of AMC on the weekly time frame for this specific formation called the bullish engulfing. Green candle engulfing the prior red that has given us a 38 out of 38 read with a 100% upside accuracy, giving us at least, this is a mean, right? Your upside thrust would be a 22.48% move to the upside. And guess what? I already studied the standard deviation. I already calculated the upper bounds of your first standard deviation and the lower bounds as well. So we were prepared for that potential downside. Know for a fact that there still could be a downside to this iteration, and that could be located anywhere between 433 to 410. I'm not saying that we're going there. I'm telling you that the mathematics, statistics are telling us that, okay? Now, the upside probabilities, 22.48% would land us in this range. First of all, $6.10, and then the next upside would be around $6.54 using math, okay, you guys? Now, the standard deviation is landing well within this range as well. I'm talking about the 29.21% landing at about 643. And now, using the upper bound of the first standard deviation, 43.69% is taking us to about $7.16 on a massive rip to the upside. Of course, guys, we're not looking for those targets right now. We're looking for the immediate short-term targets, right, in order for us to get validations of upside in the first place. Okay, you guys, I want to see you in class. I want to make sure that you can join the ArcMastersCourse for the beginners program. It is now extended to a 7-week mentorship program for beginners trading and charting. And I definitely want to see you in the first row. Make sure to enroll. Reach out to me. I'll make sure to give you the disclaimer and the syllabus and the whole plan for the lectures. Okay, you guys, also take advantage of this while it's here right now, guys. It's not going to be there forever. Join the ARCa Bulls trading team with a one-time fee, and you will forever be a Lifeline member, and we will definitely trade the financial markets here from here on until the day you die, right? So with that said, guys, I think this is a pretty good place to leave off. I think this was a great thread of analysis. If any questions or concerns, you already know where to reach me, but I definitely appreciate you watching. Okay, team, let's go ahead and get this thing moving, rolling and rolling. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever, ever. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well a very good fourth, and I'll catch you at the bell on Friday. Adios.